taking on debt or taking on equity.
This was one of the big companies back in the day.
I'm not going to say it's garbage.
This is in rookie ball.
Criticisms have really diminished in the last year. All right, guys, Tattooed Chef. This has been a very controversial stock that we've talked about. A few years ago, we got a little YouTube battle with somebody. We've since buried the hatchet, essentially, but I still look at Tattooed Chef and other companies that these YouTube hypesters endorse, and I think to myself, these are terrible. So Tattooed Chef is at the crowd-pleasing $1.44 per share.
Oh my God.
What?
I just looked at the price. This is the first time I've looked at the price.
January of 2021 was we got in the Twitter battle. It was at $25 or $26 a share. We said we had no idea how to value this company. It was terrible. And well, here we are, 98% later, not 98%. Now, I want everybody to remember, we are going to have stocks that we buy go down. There is a difference when a free cash flowing good value goes down in price versus something that you cannot value. Go watch our videos. In the past, we had no idea how to value this company, and that is way more dangerous than a company that you know how to value that falls in price. I saw a quote from Peter Lynch. I've bought stocks at 13, they go down to 2, I buy them along the way, they end up at 30. Tattooed Chef is not gonna go to 30 for anything that we see today. It's gotta crush it. So as we go through this video, a couple things I want you to do, one of which is, if you like the software, we're still running our special, $7 for 7 days at everythingmoney.com. There's a lot to the software, so make sure you watch this video and understand it. But if you've watched our other past videos, you get all these extra tools. So let's check out Tattooed Chef. 8 pillars, and there's nothing. This company, I'm not going to say it's garbage, but it's hard for us to determine this value. You know, Mo and I get a lot of flack, and we're fine with that. We're perfectly fine with it, but we did notice that the criticisms have really diminished in the last year quite considerably after the market has taken quite the turn.
I'm not getting a lot of hate DMs anymore.
Well, now you say that, people are going to slide into your DMs.
Slide into my DMs, baby. Come at me.
It's so funny. I posted on Instagram that thing about, the kids drowning in the pool and then the U.S. government's holding Ukraine and the kids Ohio. And somebody wrote me a message and said, Paul, this is not a funny math. I was like, okay, people are dying in Ukraine. Then he called me the R word. And I was like, okay, sounds good.
You are holier than thou.
This is really just a joke. I don't care about them. What was that?
People can't take jokes anymore.
Hey, that's the thing.
It's
like
very serious.
I'm okay with it. But so with Tattooed Chef, so first off, based on the market cap here, we are not going to be giving a value on the company because we've agreed as a channel with our lawyers that we're only going to do valuations on companies that have over $2 billion value. However, market cap. However, the reason we're talking about this right now is we want everybody to remember that there is a distinct difference between finding something of value and the price going down and finding something of absolute garbage value and the price going down. As an example, this phone is a $1,200 phone, whatever it is. If you could buy a ton of them tomorrow for $900, you probably would. If the next day the price went down to $600, you'd probably buy more. But if I sat there and said, here's a bag of air, and it was $10 yesterday, but today, it's $5 and then $3. Would you buy more? I mean, I don't know how to describe the exact analogy, but with Tattooed Chef, Mo, I remember going back. And by the way, our videos are still up there.
Yes.
I mean, look at the income statement. Massive growth in revenue, absolutely massive, but also massive growth in losses along the way.
Yeah, net income is getting significantly worse.
Now, I'm not saying that Tattooed Chef isn't going to be a great company someday. But what I encourage you to do is, Mo loves sports. I love sports. Mo, who's the best baseball player out there?
Mike Trout.
You think so?
Yeah.
Okay.
Maybe Shohei Ohtani.
I was going to say, I thought you were going to say Ohtani.
Maybe Ohtani.
Okay, but Trout or Ohtani? If you went to every high school in the country and you saw a kid that said that could be the next Mike Trout or next Ohtani, are you going to pay him the Mike Trout contract?
No.
Of course not. Why not?
Because he hasn't proven anything.
He's proven anything.
He can do it in high school.
It's all he's proven is he can do it in high school. Doesn't mean he won't become the next Mike Trout or better.
Right.
Tattooed Chef very well could be the best company that ever existed. But right now, based on the numbers we see, there is no evidence to support that, except for growing revenue. Great. But then I also look at growing share count. So as they grow and grow and grow, they're increasing their shares and diluting the people who invested in them early. And these are the things that we talk about when it comes to investing. We look at understanding the income statement, the balance sheet, the cash flow statement. Yes, our 8 pillars are very effective in terms of looking at the company overall, but it tells us a story. Imagine how good it'll feel to see markets falling and not have a worry in the world. Imagine how good it'd feel to have financial peace of mind. Imagine how great it'll feel to be able to understand how to read financial statements and impress all your friends when you're able to buy stocks based on facts and not emotions like they do. This is exactly what our software will help you learn and understand. For a little over $1 a day, you can have access to the same exact software that I use in our videos and that I use every single day for my own private investment decisions. It is beyond easy to use. And if you don't like it in the first 30 days, email us, 100% money back guarantee, no questions asked. Stop worrying about your retirement and future and start planning for it. So begin right now at everythingmoney.com and start planning for your future confidently today, right here, right now. Go ahead, Mo.
And we're not the only ones. I mean, I just pulled up the analyst page here just to get more information. For as big of a hype company as this was the one of the big companies back in the day.
2 years ago.
You're telling me you only have 6 analysts projecting out a year and 4 analysts projecting out to end of 2024?
You know why?
Because they don't know.
Well, also because the market cap.
Exactly. Market
cap's too small.
But also, I mean, looking at the income statement and the revenue growth and the net income declining, you have no idea what direction this is going.
I don't have a clue. I look at this and go, look at the gross profit. 0.2%. That seems ridiculously low. It is ridiculously low. This means for every $10 they bring in revenue, they generate 1% would be 10 cents.
20 cents.
So no, 2 cents.
2 cents.
2 cents for every dollar that comes in goes to
pretty solid.
Guys, there's nothing here that tells me this is going to be a great company. Could it end up being a great company? Absolutely. But it's not going to be because of anything we see here and probably anything that's out there right now. Revenue is growing. That's awesome.
Going back to the sports analogy, if this is a baseball player, let it get through the minor leagues. That's what you need to do. That's where it's at right now. This is in rookie ball.
Now, there are some positives of the company. Mm-hmm. They're doing some partnerships with Walmart.
Yeah.
They are doing some cost cutting, $30 million in cost cutting.
Which is a good thing.
It is a good thing. But remember, the $30 million in cost cutting, they lost $98 million last year. Yeah. I mean, if you're cutting $30 million, yeah, you need to cut a lot more. Mm-hmm. Because guess what, guys? If a company keeps losing money, there's 2 ways to pay for that. Taking on debt or taking on equity. That means taking on partners. And if you take on debt, you're making the company, quote unquote, riskier during a downtime. If you take on equity through more partners, through more shares, you're diluting the investors who are already there. It's just a hard pill to swallow. And again, I'll repeat over and over. If I have 1,000 tattooed chefs, there are going to be a few that really make it. But the vast, vast majority are going to absolutely probably do terrible. And if you're going for the home run, put a few bucks in a tattoo chef. I don't care. But if you're telling me that you're an investor, if you're telling me that you understand value, I don't understand I don't understand the value of this company with such a low gross margin, completely low gross margin. I have no idea how to understand that. And that's where I stand with Tattooed Chef. All right, guys. So that's our take on Tattooed Chef. Again, go back to our history, 2,000 plus videos. We talked about the hype companies and how much we didn't trust them. And they're all down a ton. Our investments are down, but we're using that opportunity to buy great cash flowing established businesses with great balance sheets at better prices as the market goes down. Thank you for your time.